Thank you for joining us this Friday, the 14th of June. I'm Sophia, a market analyst with Bell Direct, and this is your weekly market update. Well, financial markets are caught in a balancing act, dissecting recent economic data, including the Federal Open Market Committee (FOMC) meeting and US Consumer Price Index report, while also looking ahead to upcoming events that could rattle investor confidence. Fresh data on US producer prices and jobless claims caused some initial market jitters. The PPI data hinted at potentially lower core inflation than expected, which triggered a brief sell-off in the US dollar. However, these concerns were quickly overshadowed by concerns surrounding the upcoming French election. Now, investors hedge the risk of the National Rally Party's victory with concerns of fiscal indiscipline, given the sizable French bond supply coming into the market this year. This may lead to credit rating downgrades, raising concerns about the country's economic stability. Despite these economic worries, US stock markets closed higher, fueled by strong performances from big tech companies, including Apple, Adobe, and Broadcom. The broader market, however, wasn't as enthusiastic, with smaller companies experiencing losses. The strength in the US dollar seemed to be behind the decline in gold and silver prices. Asian markets are also bracing for a potentially sluggish opening, as the positive performance of the US tech stocks may not translate as well in the region. And the Bank of Japan concludes a two-day meeting today. Investors are keenly awaiting to see if the bank may make any tweaks to its bond buying program, which could have further repercussions to global markets. Now, also this week, to sum up local corporate news, Deterra Royalties is making a move to acquire a British lithium mining company. Qantas Airways is expanding its reach by purchasing the remaining stake in Tripadil. The ACCC is raising concerns about a potential merger in the pharmacy sector, citing potential harm to competition. Beach Energy successfully made its first gas sale, and the ASX shares faced pressure after the stock exchange announced forecasts for higher expenses and capital expenditures in the coming years. Now, looking at the market's performance this week so far, the ASX 200 is down 0.25% Monday to Thursday, with the materials and energy sectors weighing down on the market the most. Meanwhile, the consumer discretionary and consumer staples sectors advanced the most, up 3.07% and 2.53% respectively. Auto repair retailer Bapcor, that's BAP, was the best performing stock this week, with investors buying in after the company received a conditional and non-binding takeover proposal from Bain Capital, which could see Bapcor's shareholders receive a $5.40 cash per share from the private equity giant. The Bapcor board are currently considering the offer. Meanwhile, Pro Medicus PME, Polynovo PNV, and Helios HLS advanced this week. And some big miners that suffered this week, Pilbara Minerals PLS declined the most, down 10.5%, as the lithium price continues to fall, and general consensus is that lithium prices will stay lower for the foreseeable future. Liontown Resources LTR, Arcadium Lithium, that's LTM, Nickel Industries NIC, and Mineral Resources MIN are also in the red. And the most traded stocks by Bell Direct clients this week were CBA and BHP. Clients also bought into Pilbara Minerals, Rio Tinto, Perseus Mining, and Whitehaven Coal, while took profits from Westpac, NAB, Telstra, and Grand Resources. And the most traded ETFs this week were the VANEC Australian Subordinated Debt ETF, the iShares S&P 500 ETF, and the iShares Asia 50 ETF. End-to-end economic news to watch out for next week includes the RBA's interest rate decision out on Tuesday, which is expected to remain unchanged at 4.35%. And on Friday, the Manufacturing and Services Flash PMI will be released. And that's all for this week. I'm Sophia with Bell Direct. I hope you have a great weekend. And as always, happy investing.